Hey everyone, it's Prashant here. Welcome to my brand new YouTube channel where we'll be learning about personal finance together. Thank you for joining me in today's video, and let's dive right in. In today's video, we're going to be talking about credit scores. We'll discuss what a credit score is, what are the factors affecting your credit score, what is a good credit score, and what you can do to improve your credit score. Most people in the US have a credit score. When someone is born in the United States, they are issued what is called as a social security number or an SSN at birth. Legal immigrants and non-immigrants can get a social security number if they meet certain requirements. A credit score is not the same thing as a social security number, but having an SSN is a prerequisite to developing or building a credit score. Basically, you start building a credit score when you start applying for and receiving and using credit. Before we move further, let's first talk about what a credit score is. Now, let's say your friend asks you for $40 to pay for dinner one night. Now, you've known your buddy for 12 years and you trust him, so you just give him the money and a week later he pays you back. Now, think about when you ask a bank for a credit card or a mortgage. The bankers don't personally know you, so how would they know that you're a stand-up guy who pays back all of his debts? Lenders need to have an easy and convenient way to figure out which borrowers are able to pay back their debts. And borrowers need to have an easy and convenient way to prove to banks that, hey, they can pay any debts they might owe. The credit score solves this problem. A credit score is a 3-digit number that summarizes your credit risk. The higher your credit, the lower your credit risk, and more likely banks will be to give you more credit, and you will pay a lower interest rate to obtain that credit. This is because banks want to be compensated for giving out loans to a risky borrower. Hey, if there's a chance that they might not get their money back, they want to be compensated for it, and they're going to charge a high rate of interest from this borrower. So you see, the credit score is a very important number. In fact, it basically defines whether or not you'll be able to get a credit or not. And having access to good and cheap credit may define whether someone will be able to climb the wealth ladder or not. Think about it. If you're paying a high rate of interest for a loan that you don't have that money available to be able to save or invest in the stock market. Or worse, if you have a really bad credit score, you might not be able to get any credit at all, which maybe even results in you not being able to buy a house at all. Guys, before we move on with this video, I want to take a minute to ask you to please hit that like button and that subscribe button and share this video with somebody who you think might find this content useful, maybe a friend, a coworker, a classmate. This will help me a lot with the YouTube algorithm and will help me to keep making these videos for you guys. Now, let's get back to it. Credit scores vary from 300 to 850 in the US. There are 3 main credit reporting bureaus in the US: Experian, Equifax, and TransUnion. And there are 2 models of credit scores in the US too, the FICO and the Vantage credit score. There are differences between the credit score for any person between the 2 models, and it's not really sure why. Both of these companies have proprietary formula that they use to determine a person's credit score. The thing is, you should not get bogged down in why there's a difference between your credit score between the 2 models. You should just focus on building credit and increasing your credit score. Chances are, if your score is increasing on one model, it's probably increasing in the second model also. There are many ways of tracking your credit score. Once a year, you can get a completely free, complete credit report from all 3 bureaus. This is mandated by law by the Federal Trade Commission. In addition, if you have a credit card with a company like Chase or Discover or Wells Fargo or just even a regular bank account with them, they will typically allow you to see your credit score on their mobile app or on their website at any time for free. You can literally track how your credit score is changing from month to month to month. In fact, this is something that I personally do quite a lot. Now let's talk about the factors that affect your credit score. For the purposes of this video, we're going to limit our discussion to the FICO model of credit score, which was developed by the Fair Isaac Corporation. There are 5 factors that affect your credit score. The first one is called payment history. This factor is the largest factor affecting your credit score. In fact, it comprises for 35% of your credit score. Lenders really want to know that you are making your payments on time. The second factor affecting your credit score is called credit utilization. This comprises of 30% of your credit score. This is comprised of 2 parts. The first is how much credit you have available to you. Basically, the sum of the credit limits on all your credit cards. And second, how much of this credit you're using at any given time of the month. The third factor affecting your credit score is called length of credit history. This is basically how long you've been using your credit. If you've started using credit at 18, congratulations. This is going to work in your favor much more than somebody like me who started using credit at the age of 23. The fourth factor affecting your credit score is called types of credit or credit mix. Lenders basically want to know that you are able to responsibly manage different types of credit, such as a mortgage, an auto loan, a student loan, and a credit card. The fifth factor affecting your credit score is the number of hard inquiries. This is responsible for the final 10% of your credit score. Essentially, when you ask a lender for credit, they do what's called a credit pull or a hard inquiry on your credit score. This is a count of those hard inquiries. A question that often comes up when it comes to credit scores is, what is a good credit score? Once again, let's look at how the FICO model defines this. A credit score ranging from 300 to 579 is considered a very poor score. Basically, if you have a credit score within this range, you're unlikely to qualify for any credit. You'll more than likely have to put down a deposit to get a secured credit card. A credit score ranging from 580 to 669 is considered a fair score. Borrowers who have a credit score within this range are considered subprime borrowers. Any credit that will be offered to these borrowers will probably come with a very high interest rate. A credit score of 680 to 739 is considered a good score. Borrowers with credit score in this range will get credit offered at average interest rates. A credit score from 740 to 799 is considered a very good score. If you have a credit score in this range, you're going to get offered credit at lower than average interest rates. A credit score ranging from 800 to 850 is considered an exceptional credit score. If you have this credit score, congratulations, you did it. You're going to get offered credit at the lowest rates that the lender can offer you. Now let us talk about how to increase your credit score. You see, the credit scores are a catch-22 situation. What this means is you need to have credit to build credit. This can certainly be a difficult system to navigate, especially when you're really just starting. I will go through the factors that we talked about before one by one and talk about tips that you can use to increase your credit score. Factor number one, payment history. Always, always, always make your payments on time. Never miss a payment and never be late on a payment. A late or missed payment will stay on your credit report for 7 years and drag your credit score down for that entire time. 7 years is a very long time to pay for that mistake. You should always, always strive to make your payments on time. The best way to make sure that you do not get behind on any payment or miss a payment is to automate your payments. That's right, go ahead and automate all of your payments. Your credit card, electric, gas, internet, mortgage, whatever it might be, go ahead and set up automatic bill pay so that your bank automatically pays that bill when it's due. Missing a payment or being late on a payment may cost you thousands of dollars in paying higher interest rates or missed credit opportunities. Credit utilization. You should always try to keep your credit utilization under 30% of whatever your credit limit is. What this means is if you have a credit limit of $1,000 on a credit card, you should never put more than $300 on that credit card. Now I know what you're thinking, but Prashant, my expenses for the month are way over $300. That's okay. Here's what you do. You go ahead and let's say you spend $300 on during the first week on that credit card. Now on the weekend, you go ahead and pay off that $300. So now your credit card balance goes down to zero. And you can start again the next month and so on and so forth, just paying off that $300 every week so you never really go above 30% credit utilization. In fact, that is what I used to do. In the beginning, when I got my first credit card, I had a very low limit on that credit card. And I was used to paying that credit card off about 2 times a week. In fact, even now, I pay off my credit card a couple times a month at a minimum. As your income increases and you make your payments on time, your credit limit tends to increase as well. Your credit card company will automatically increase your credit limit as they see your income increasing and you being responsible with your payments. In fact, you can even ask your credit card company to increase your credit limit from time to time. However, before doing this, I would read about this on the company's website and talk to them before, because sometimes when you ask for a credit limit, they might do a hard inquiry on your credit report, which might affect your credit score adversely. The third factor, length of credit history. There's nothing really that you can do about this. As you grow older, your credit history will become longer and longer, and this will cause your credit score to go up. The only thing to keep in mind is to keep your oldest line of credit open. So this means if you have an old credit card that you don't no longer use, you no longer need, maybe you don't like it, maybe you don't like the offer on it, that's okay. It might be beneficial to just keep it open and use it to make a small purchase, like an Amazon purchase or something from time to time, and just pay it off. Keeping this credit line open and active might benefit your credit score over the long term. The fourth factor is types of credit. Now, as you go through life, you might open different types of lines of credit, such as a credit card, an auto loan, or a mortgage. Now, as you get a more diverse mix of credit, your credit score will go up. Now, keep in mind, I'm not saying you should go ahead and open different lines of credit that you don't need. Far from it. Just make sure that you're opening credit that you need and that you can use responsibly and make all your payments on time. The fifth factor affecting a credit score is your number of hard inquiries. Again, there isn't too much that you can do about it. Just remember, only open credit lines that you expect to use or that you need to use, and you'll be okay. So you see, guys, the credit score is an extremely important number, and you have to make sure you focus on it and pay attention to it and make sure you have a good credit score. Because if you end up not paying attention to it and end up with a suboptimal credit score, it may cost you hundreds of thousands of dollars in higher interest rates and missed cheap credit opportunities. That's all I have for you guys in today's video. I hope you found that video helpful, and maybe you found a tip or two that you can use in your own personal life to increase your credit score. Please go ahead and hit that like and subscribe buttons and hit the notification bell icon so you get a notification every time I post a new video. I'll be posting one video every week with great new financial content, and I hope to see you there every week. Also, go ahead and follow me on Instagram. I'll have the handle down in the description so you can follow me there, where I'll be posting every week as well. Thank you so much for watching, and see you next time.